Hello everyone, I'm Rob Smith of the In the Black Quant Edge VTF here, T3 Live, and this is the Quant Edge Breakdown. And I want to show you a few things about what happened in the market in the last few weeks, how absolutely telegraphed it was. Once you understand the universal truths of price action that I explain, teach all the time, there's three universal principles. I'm going to show you exactly how obvious it was and why. If we go to the S&P SPY, we started off, once again, when things occur matters. We had an inside week to start off of July, right? Could we expect the probability of that? Yes, because we had a shortened session on Monday. We were closed on Tuesday for the 4th of July. Therefore, we only had 3.5 days. So when we opened in the middle of this range, good probability we're going inside, which means we couldn't take out the higher high, couldn't take out the lower low. Therefore, consolidation, equilibrium. If you go to the daily, we had 1, 2, 3, 4, 5, 6, 7 days completely within this bar's range. That's a problem. You can expect to get chopped up if you don't understand that. If you're not breaking into highs or lows, things are going to reverse back and forth. However, we got our clue on Wednesday or Tuesday. They had the Donald Trump Jr. email comes out. Oh no, now it's really over. Wrong. Comes up to hammer on them, and then on the gap here, that takes the inside weak. All right, actionable above that. Daily momentum hammer here off a green bar. Here, two actionable signals to get long from. We can break that down into shorter term stuff, and then it breaks and continues into the highs with that inside equilibrium break on the weekly. One of the things you're going to realize is that at this point, time frame continuity matters. What that means is, anytime that when we have these multiple actionable signals and the S&P is trading higher than it opened on the 60-minute, the daily, the weekly, and the monthly, that's called full time frame continuity to the upside. We have every reason to believe that the price is going to continue due to the multiple actionable signals. We break it down into shorter signals to continue to buy more. Once again, when you can see a series like this, right? And some people are like, oh, it's breaking the trend line. That's not why this would continue. The reason this would continue is because of these actionable signal equilibrium breaks to the upside. When we have full time frame continuity to the upside, that means every known participant is a buyer. Guess who's on the wrong side? People who are short. Guess what they're short against? Obvious pivots. Here, 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 and here. Take them all out. That's why that works. What was really nice and really telegraphed was the NASDAQ. All right, when you go to QQQ, I want to show you the weekly. If you go to the weekly, all right, the last week of the month of July was an outside week. All right, final week of the quarter. An outside bar, which means it takes out both sides of the previous range, is a broadening formation on a shorter term time frame. It has to be. It took out both sides of the range. Nobody can dispute that, right? But unlike when people are looking for head and shoulders or cups and handles or whatever they believe, this is statistical fact. The level of aggression the buyers are willing to pay higher. They were willing to pay higher, and the sellers are willing to sell lower. That's more important than whatever figment of the imagination. That's a stone cold fact, right? And this is a sequence you're gonna really want to know. So when it comes down here, shortened week, July 4th of July, hammers, slight lower low, hammer back into the broadening formation. Is that important to know? It is. Why? Because this is an actionable signal, this hammer, to go back. Should this sequence continue, expanding the range, all right? They're willing to take it, and they're willing to try it in the beginning of July, failed, right? So if the sequence continues, we're going to go try and take out the other side again, which they did. What you will also notice is that when things line up similarly, that's when the bigger moves occurred. Did we see this in other things? We did. XLK, SMH, right? All that kind of stuff. So if we continue to look for that kind of stuff, what do we have here? Facebook. Make sure you can see this, because I want you to understand the sequence real good. Outside bar countered with hammer. Facebook, boom, right up into here. That's what we're looking for. That's our target, and it went through it because it happened before the QQQ could do it. And we'll get back to that in a second. Netflix, outside bar countered with hammer. right? This broadening formation, willing to take out both sides. Attempt to the downside failed. Boom. During actionable signal, periods of full time frame continuity to the downside or to the upside, we're looking to add. Now, we can also use statistical data to say what was too strong to even get taken out that 4th of July week. Texas Instruments stayed inside. There's no reason to believe that's not going to go. AMAT stayed inside, too strong to take that out. No reason to believe that wasn't going to work. Very, very telegraphed stuff. And so once again, when I say QQQ, outside bar is a fractal broadening formation, like I just said, it's more important to know that what this data is telling you. They're willing to take out the highs and the lows. So if you want to find broadening formations, all you need to do is go to the longer term time frame. The monthly outside bar is a weekly broadening formation. The weekly is a daily. So this one here on QQQ, unlike any other so-called pattern, that's all you got to know. Outside bar, shorter term time frame. Lower low, higher high, lower low, higher high. As a matter of fact, this hit the objective to the tick. The high was 142.29 on Friday. It went to 142.30. Now, why would it do that? All right. First of all, we know it's going to go against obvious pivots, take them all out. And that's the objective. Take them all out, and the range will expand. Once again, if we go contraction to the bigger expansion, when they're willing to take it out on both sides, are they willing to do it again? Yes, they are. If you want to understand that sequence again, let's take a look at Apple. A little bit different of a sequence, but very important nonetheless. What do we see here? Apple goes inside weak, outside weak, fractal triangle. It has to be, took out both sides. Inside again, inside, outside, inside. What is that sequence telling me? That tells us, and we'll break it down tighter. What that tells me is an equilibrium. Couldn't take the higher high or lower low. Both sides were aggressive enough to try and take out the highs and lows. They were not successful in moving it. They came back to another consolidation. Contraction, expansion, contraction. Gee, I wonder what's next. Expansion again. Bam. Right? We can expect that to happen. So if you've ever been or know that person that says, oh, if I stay in, the price comes back on me, but every time I get out, it keeps going. Those are the people that don't understand this. All right? You need to understand where you are in the sequence of expansion and contraction. That's how you can identify the bigger moves. If we go to the Dow Jones Diamonds, just come Friday, Dow Jones Diamonds went inside day to the upside. When did that occur? Friday. Is that good? Yes, because you can trade cheap options. Can we look for, once again, as we would look for in all that stuff that was telegraphed last week, you can break it down to shorter term time frames for further entries. Here, inside 6T pow, right through the strike up into here, right? And what does that tell us? That also tells us we can look for the strongest stocks in the Dow to go up. Did we have one? You did. You bet. You go to Boeing. Boeing. Inside weak to the upside, closes on the highs. So, in a nutshell, this was very telegraphed. We could see it coming a mile away. You could see how they acted at the end of the month, how things acted during that short week. And then once everything kicked into gear last week, plain as day. But you need to understand when you are trading in a contraction, something is still building an inside bar, or whether you're trading in an expansive environment. And this is exactly how you can do it. All right, so hopefully that helps. And now you know when you're trading now you're going to know whether you're trading in a contracting or expanding environment. All right, I'm Rob Smith in the Black Quant Edge VTF here at T3 Live.